Want to know where the real long-term growth is hiding? It's not in the latest tech fads. It's in healthcare, an industry everyone needs. Welcome back to Tech Monetize Official. I'm Sarah, and today we're breaking down the top healthcare growth stocks for 2025 through 2030. These aren't random picks. These are companies with strong fundamentals, real innovation, and huge growth potential. Healthcare is not just recession-resistant, it's on the verge of a tech revolution, from AI diagnostics to gene editing. I've dug deep into financials and trends to bring you this list of 10 companies. I'll explain why they stand out, their competitive edges, and the risks you should know. Let's dive into the first company. You won't want to miss this. UnitedHealth Group, ticker UNH, is a healthcare giant, but much more than just insurance. Their strength is diversification: insurance, data analytics, pharmacy benefits, and direct patient care. The Optum division drives growth with tech-enabled, data-driven health services. They deliver steady growth, beat earnings, and reward investors with buybacks and rising dividends. The main risk is regulation, but their size helps them adapt and shape policy. That's why UnitedHealth is a foundation for any healthcare portfolio. Let's move to our next innovator. Eli Lilly, ticker LLY, is leading in diabetes and obesity drugs, with blockbusters like Mounjaro and Zepbound. Demand is so high, they can't make enough. But Lilly's pipeline also targets Alzheimer's, immunology, and oncology. They invest heavily in R&D to drive future growth. If they keep executing, today's price could look cheap in 5 years. Thermo Fisher Scientific, ticker TMO, is the picks and shovels play for life sciences. They supply the essential tools, equipment, and services that power biotech and pharma breakthroughs. Their business spans genetic sequencing, analytical instruments, diagnostics, and lab services. The beauty? Recurring revenue from consumables and service contracts. Think razor and blades. This model creates sticky customers and high margins. As R&D spending grows globally, so does Thermo Fisher. They're expanding into emerging markets and riding trends like personalized medicine. Not as explosive as a biotech, but steady. Compounding growth makes TMO a core holding. For broad exposure to life sciences, Thermo Fisher is hard to beat. Vertex, ticker VRTX, built a monopoly in cystic fibrosis treatment, transforming patient lives and generating massive, predictable revenue. Their CF franchise funds a deep pipeline targeting rare diseases and gene editing, including the approved sickle cell therapy, Casgevy. Vertex's fortress balance sheet gives them flexibility to invest and acquire. The big question: can they replicate CF success in new markets? Their pipeline includes kidney disease and non-opioid pain treatments. Execution risk is real, but their track record and cash reserves inspire confidence. Vertex is evolving from a one-disease wonder to a diversified rare disease powerhouse. For investors, it's a story of innovation and smart reinvestment. Let's see who's next. Intuitive Surgical, ticker ISRG, created and dominates robotic-assisted surgery with the Da Vinci system. Their model is brilliant: sell the robot, then generate recurring revenue from single-use instruments for every procedure. Over 70% of revenue is recurring, tied to procedure volume. Hospitals face high switching costs, giving Intuitive a deep competitive moat. Growth potential remains huge, especially internationally and in new types of surgeries. They're constantly innovating, expanding their platform and addressable market. Competition is rising, but Intuitive's head start and installed base are major advantages. If you believe in tech-driven, less invasive surgery, ISRG is the clear leader. A phenomenal growth story in medical devices. Moderna, ticker mRNA, proved the power of mRNA with its COVID vaccine, but that's just the beginning. Their mRNA platform can rapidly create vaccines and therapies for a range of diseases. COVID's success gave them validation and a cash war chest to fund a broad pipeline. They're developing combination vaccines, RSV shots, and even personalized cancer vaccines. The risk COVID revenue is fading, and the market wants to see new products succeed. If even one or two pipeline candidates hit, the upside is huge. Investing in Moderna is a bet on mRNA's future in medicine. High risk, high reward, but the potential is revolutionary. Let's check out the next innovator. Dexcom, ticker DXCM, leads in continuous glucose monitoring, CGM, revolutionizing diabetes care. Their wearable sensors provide real-time glucose data, empowering better decisions and outcomes. The CGM market is expanding rapidly, now reaching both type 1 and type 2 diabetics. Dexcom's recurring revenue model, sensors replaced every 10 days, creates stability and growth. Integration with insulin pumps is building a powerful diabetes management ecosystem. Competition exists, but Dexcom remains the premium leader through constant innovation. The global diabetes epidemic is a massive tailwind. As awareness and insurance coverage grow, Dexcom's runway for growth looks long. A top pick for exposure to digital health devices. Regeneron, ticker REGN, is a research powerhouse, known for blockbuster drugs like Eylea and Dupixent. Their proprietary VelociSuite tech accelerates drug discovery and development. Eylea's success-funded expansion, but Dupixent is now the star, with a huge and growing market. Regeneron's pipeline spans oncology, rare diseases, and infectious diseases. They're highly profitable, disciplined with capital, and focused on internal R&D. The company's ability to transition from one blockbuster to the next sets it apart. Valuation is reasonable given their growth prospects. For pure scientific innovation, Regeneron is a top-tier choice. Let's look at the future of virtual care. Teladoc, ticker TDOC, is the global leader in telemedicine, making virtual care mainstream. The pandemic accelerated adoption, but the trend is here to stay. Teladoc's platform connects patients to doctors 24/7 for everything from urgent care to chronic disease management. Their acquisition of Livongo expanded their reach into data-driven chronic care. The stock has been volatile, with growth slowing and integration challenges. Still, Teladoc's scale and brand make it the dominant player in virtual care. The opportunity proved they can grow and turn profitable as virtual care expands. Higher risk, but high upside if they execute. For believers in digital healthcare's future, Teladoc is a compelling speculation. Illumina, ticker ILMN, dominates gene sequencing, powering breakthroughs in genomics and personalized medicine. Their technology slashed the cost of sequencing, unlocking new clinical and research applications. Illumina's recurring revenue model, selling machines and consumables, drives steady growth. Applications range from cancer diagnostics to prenatal testing and rare disease diagnosis. Recent regulatory battles over acquisitions have hurt the stock, but the core business remains strong. As sequencing costs drop, clinical adoption will explode. Illumina is the backbone of the genomics revolution. For exposure to the future of medicine, it's a standout pick. Let's wrap up with your healthcare portfolio checkup. There you have it, 10 companies shaping the future of healthcare and offering major growth potential. From integrated giants to biotech innovators, healthcare is a diverse ecosystem with huge opportunities. Do your own research, understand the risks, and make sure these picks fit your goals. Hopefully, this gives you a strong starting point for your watch list. If you found value here, hit subscribe and like. It helps us reach more investors. We're building a community at Tech Monetize Official to find the best ways to grow wealth together. Thanks for watching. I'm Sarah, and I'll see you in the next video.